Hello and welcome. You have tuned into In Your Interest here on News 9 Live. I am Krishna Kumar, and the big story we're taking up on the show today is the latest warning from market regulator SEBI. Stock market regulator SEBI has issued a stern warning to investors dabbling in the SME or small and medium enterprises segment. SME IPOs have been making waves on Dalal Street, drawing interest from investors both small and big. That's right, investors, retail investors like you watching, and the HNIs or high net worth investors. Many of these SME IPOs have delivered impressive returns, with some even doubling in value on their debut before the NSE stepped in with a 90% cap to temper the excitement. This boom in SME stocks is driven by high market liquidity, the fear of missing out or FOMO, and increased retail investor participation. However, SEBI has uncovered evidence that some SME promoters are presenting an unrealistic picture of their companies. This boosts the demand for their shares, allowing promoters to offload their holdings at sky-high prices to unsuspecting investors. The warning from SEBI comes as SME IPOs continue to surge, leaving even experienced investors baffled. Consider the recent IPO of Resourceful Automobile. Despite operating just 2 Yamaha dealerships and having only 8 employees in total, it attracted an eye-popping 4,700 crore rupees in bids for a modest 12 crore rupee issue. And that is just the tip of the iceberg. Let's get in deep on the matter with our special guest who's joining us on the show. We have Mr. Nishchal Maheshwari, market expert, with us here on In Your Interest. Thank you, Nishchal, for taking time out to be with us here on the show. Now, the SME IPOs have been under the radar, especially after that Resourceful Automobile IPO came out. That's when everybody's interest peaked. What exactly is going on over here? And now, to prove all suspicions right, you have this warning coming in from no less than market regulator SEBI.
Evening, Krishna. Yes, I think this is really something which is I think SEBI is also very worried about it. I think for the last 1.5 years, the SME market is booming, and obviously I think it's a good sign that you have small enterprises basically where they can also go out on an exchange to raise money, and thereby are able to get some equity flows for themselves. But I think this is looks like more speculation than anything else. I have not looked at this company, but I've historically not invested in this SME markets at all. So difficult to say, but there are good companies there. But I think what recently we saw some Yamaha dealership coming and raising money. Now that would be a bit far-fetched. So I think investors need to be cautious about that.
Right. Fact of the matter is that IPOs have suddenly become a great avenue for first-time investors in the Indian market to get in, especially considering the high valuations of stocks at the moment. So it's only natural that so many investors are going to flock towards these IPOs, and possibly some of these IPOs are not exactly what they seem to be.
So I think that the merchant bankers have to actually, who have been bringing the issues, they have to be very careful about this. What kind of valuations, what the kind of company, because SEBI requires the merchant bankers to do their due diligence very properly. We have done on the NSE and BSE. I have personally taken several companies to the market, and believe me, basically SEBI is very thorough, very strong on the merchant bankers. Basically said, have you done your proper work or not, basically on the companies. So I think we need to be cautious. The merchant bankers who are bringing these companies, they need to be cautious about the companies. And secondly, I think the investors should also be very cautious, basically, given that there is huge amount of frenzy. And obviously, the liquidity wall is actually driving on the whole thing, basically, both on the larger 2 exchanges of BSE, NSE, as well as on the smaller exchange. So people need to be cautious, go through it very thoroughly before trying to invest anything into the SME market.
Okay. The reason why I'm asking, when I've been having this conversation here at this stage, is that these are not just suspicions anymore. When SEBI comes out with a warning, stern warning like that, is SEBI essentially pointing to the fact that there is a scam over here? There is a problem over here. There is window dressing over here when it comes to some of these SME IPOs.
So I think SEBI has been very closely watching this. This is not the first time which SEBI has highlighted this thing. Basically, they have been very, very closely watching this, and again and again they have been cautioning both the exchanges, the larger ones and the smaller ones, and the merchant bankers, very saying that you need to be very, very cautious. Basically, at this high valuations. I think this is one of the stands which SEBI has taken historically. And again, they are highlighting this. So I think the merchant bankers and the investors both need to be very, very cautious now, because SEBI must be having some evidence of whatever is happening on the exchange. And that's why they are cautioning them again.
Right. The words that are used are interesting, unrealistic, and some of these portrayals are overtly optimistic. I mean, simple words, but they mean a lot, and it could mean, dire consequences for people who don't research and do their due diligence before they go for these IPOs.
Yes, I think that's why I'm highlighting. Basically, it's first responsibilities of the merchant bankers. They have to be very thorough, basically, about the company, what they are bringing to the market, what is being disclosed is right or wrong. That is the one thing, basically, the merchant bankers are responsible for. And they have to be very, very cautious in this kind of a scenario. And secondly, the investors themselves, basically, that they have to be cautious given that this kind of frenzy is there, 2,700 crores for a 12 crore IPO. I think this just shows basically there is huge amount of frenzy out there. So it's the best time to avoid. I think if I would tell the investors, especially on the SME side, it's time to avoid that exchange. Let it cool down for a couple of months, 2-3 months, and thereafter once again look at it. But after 2-3 months also, basically, you should be very thorough in your due diligence instead of just going by hearsay.
Now, the question here is also, one is merchant bankers and the other is investors. But then, first of all, who gives the go-ahead for these SME IPOs? Clearly, it's not SEBI, it's the exchanges.
No, I think so. Even in case of SME, they have to file this with the SEBI also. I don't think so that the only exchanges are giving the go-ahead.
Okay.
That I'm not sure, but I believe basically it is being filed. I think the merchant bankers have to be very, very sure basically where they are, what they are giving in the documents.
Is that from our understanding over here, the documents are vetted only by the exchanges. The documents are not vetted by SEBI for these IPOs.
Okay, possibly. That's why I thought, that's why I said basically I was not very sure. So I think then in that case, basically whoever is the vetting agency, so either it is SEBI or stock exchanges. The stock exchanges have to be very, very cautious basically that what is being brought by the merchant bankers basically, are those numbers right, wrong, over optimistic? I'm saying somewhere they have to push the merchant bankers basically and do a more thorough job.
Okay. The fact of the matter is that there is vested interest here for the exchanges. They are private entities. They would like more and more companies coming to their exchanges to list. So in that sense, there is a very good chance that they will want to overlook, when an SME comes to them for an IPO.
See, but these are organizations basically which are not only for profit basically. They have a huge fiduciary responsibility, because one bad fall basically all the whatever IPOs are in the pipeline will all go away, and then it will be a difficult job basically. So they lose their long-term income. So they need to be more cautious here. Otherwise, one fall and the whole market tumbles. So that's why I'm saying basically the exchanges need to be more cautious rather than actually being exuberant about this.
And what do you think the SEBI can do here at this stage? If SME IPOs, go, it's all between the company and the exchanges. Now, SEBI is concerned considering, the returns that they've earned, the phenomenal returns that they've given to investors so far, and the fact that, the seemingly dubious nature of some of these new SME IPOs.
I'm saying both the exchanges are in turn basically governed by SEBI. So there is nothing that SEBI cannot do. So if SEBI has put this on notice basically, and SEBI has noted that there is this kind of unrealistic exuberance, SEBI will definitely call for both the exchanges to be more cautious and do more thorough job. So I think SEBI can intervene as and when they seem appropriate.
Anything that can seem appropriate, I think. But until then, it is really the lookout of the investors watching this broadcast, isn't it? Because one is to identify a good opportunity to enter the Indian market, and the other is to run along with the herd. And clearly, FOMO is not the right way to enter the Indian market.
No, definitely. I think historically we have always said basically that the best way to enter the Indian markets initially, till you are well equipped to understand the stock market, is through the SIP route into the mutual funds. That's the best way to go out basically, because there is a huge amount of schemes which are available, various fund managers, which are very, very well equipped basically to give you a very good perspective and give you good returns. I think that's the best route for any starter, any person who's starting into the stock markets. And thereafter, once you are able to get enough, you are well equipped there, then you should start looking at investing into the stock markets directly.
Okay, if I were to ask you, why are retail investors even getting into some of these SME IPOs? They want to make a quick buck, right, at the end of the day.
Yeah, that's true basically. I think, and then there is peer pressure. My neighbor is investing; he has made very quick money. My friend is invested. My colleague has invested. So I'm saying this is what is actually driving. Okay. So people are, and then there is easy access, which is I think very good. That there is easy access to do this. And it's sort of become a lottery now. Now, if you look at it basically for a 12 crore issue, 2,700 crores bids, it's like maybe 1 in 1,000 or something like that, that kind of number basically. So it's virtually a lottery.
Virtually a lottery. I'm afraid we've completely run out of time on that note. Nishal Maheshwari, market expert, thank you so much for taking time out to be with us here on In Your Interest. Thanks.